Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whatever time zone you are tuning in from. And I'm very excited to welcome you to another promising edition of our Forex Morning Mastery. Unfortunately, we're starting a little bit later than expected. We had some technical issues. We've been battling it for over an hour now, but thankfully, we are right back on, and I'm very excited to have you join me. And for those of you who stayed patient, thank you. So, how are we all doing today? I trust we all had a great weekend. And how good are you? I just saw your comment, Efat Shakda. Good morning, Efat. Long time. How are you doing? I'm doing very well here, and trust you're doing the same as well. You said you can join some of my videos. I don't understand why that is. My videos are made public except for the sessions we run on Sundays. I would love to hear more on that and which videos are you talking about so we can see if we're on the same page. Okay, so I look forward to hearing from you, Effort. Okay, my own name is Sheriff Daramola, and for the next 30-40 minutes, depending on how soon or later this session goes, I'm going to be your host as we delve into the financial market, preparing ourselves for the new week. And of course, we have some interesting and simple trading setup evolving on the chart right now, and I'm very excited to share them with you. Though I already have some positions running, but it's not too late for you to capture those moves if you're planning to join me on this one. So today we are going to be running into three financial instruments as always, but instead of the USDJPY this time around, I'm going to be trading the GBPUSD this week. The USDJPY has been a little bit choppy in the last couple of weeks with no clear direction. And while I was looking at the market during the weekend, I saw an interesting setup on the GBPUSD, which I think I can capitalize on this week. And I will be sharing with you what ideas around that setup and why I'm going to be trading that. So if you're a fan of the GBPUSD, you want to stay tuned in as you do not want to miss out on the session. Then we are going to be running through the USOIL spot as well, and of course the XAUUSD, popularly known as the gold spot. So the first thing we are going to be doing, as always, you know how we do it. The first thing we want to be running into the US dollar market dynamic. It is very important for us to intimate ourselves with what is going on in that market, or else we get lost in the woods. Whatever happens around the US dollar market, of course, ripples across the other financial instruments that we are monitoring. And what you can see on my chart right now is the DXY, that is the US dollar index. The dollar dropped last week due to expectations that the Fed might cut interest rates anytime soon. We saw that happen. And of course, we also saw some geopolitical tensions, like the situation between Trump and Putin. The anticipation of that meeting also brought the dollar down a little bit. But I think our center of focus today is going to be into what is likely going to happen this week. And currently, the US dollar is being driven mainly by expectations around the Federal Reserve's next move on interest rates. And stronger recent US inflation data has cooled hopes of a big rate cut, keeping the dollar a little bit supported in the meantime. But traders are still looking ahead to September for smaller cuts, and with Powell's Jackson Hole speech coming up later this week, everyone is waiting patiently to hear. Now, if you look at the economic calendar, we really do not have an impactful event today and tomorrow. And the major event coming in from the United States will be on Wednesday, when the publication of the FOMC minute will be released. Then we have Thursday, Friday, the Jackson Hole Symposium. We have the S&P Global publication, which will be giving us an insight into the performance of the manufacturing and service sector of the United States. And then we are going to be listening to the Fed chairman speak on Friday. And this, of course, will be giving us an insight into how the Fed is going to be looking like going forward. Now, while we wait for this event, of course, we know the market will be gradually anticipating that event, and this anticipation usually reflects on the chart as price action. Now, looking at the chart here on the 4 hours time frame of the DXY, remember, since the beginning of the year, the US dollar has been dropping significantly, finding lower lows and lower highs along the path. However, something interesting began to evolve on the chart since the beginning of July. So we know the dollar appeared to be gradually recovering through a series of rebound as price begin. And if we connect the series of higher lows since 1st of July, you will see that we have a beautiful ascending trend line to guide our trading activity this week. In fact, it has been supporting the uptrend scenario on the US dollar since the beginning of July. So we are talking about 7 to 8 weeks of historical data as price continues to find higher highs and higher lows. And in the last couple of weeks, we can see price is back into the trend line, and as soon as it tested the trend line last week, so price find some bullish pressure and giving us signs that we might likely be seeing another wave of bullish momentum anytime soon. And you know how we use our ascending trend line. Of course, as long as price remains above them, we will continue to look out for patterns and structures that support buying ideas. And the only condition that will make us consider selling is only if this trend line is breached and broken to the downside. A breakdown of this trend line will be the first time price will break down the structure in the last 8 weeks. And in fact, that will signal that we're about to see a nosedive in this particular market. But at the meantime, that is not happening right now. Price still remains above the ascending trend line. And of course, all we want to be looking out for on the USD right now is that the sentiment is supporting a potential uptrend scenario on this particular market. So that is basically what we are going to be looking at and taking into account of while we go into the financial instruments that we are monitoring for this week. Now, with this information we have gathered here, let's move right into the assets we are monitoring this week. And of course, the first one on our list is the USOIL spot. And of course, on the USOIL spot, I really do not have any important structure except for the key level that will be guiding my trading activity for the week. And after taking into account the character of price action in the last 4 months, I was able to spot the $61.50 level as my key level going into this week. And look at how this level had played a significant role in determining the direction of price action in this time frame. We can see choppy situations between May and April, and within those time, price did use that level as either a support and resistance. But since the break and settling above the structure in June, just right here, as you will see, price still remains above the $61.50 level. And during the course of last week trading session, we saw a sharp rejection here, giving us a hammer candle, which technically is considered to be a bullish bullish signal, right? Then we saw what happened on at the beginning of this week. Price dropped significantly, but sellers were unable to break through the $61.50 level, giving us signs that buyers still remains in the market and that this area around the $61.50 level may continue to be a robust demand zone going into this particular week. And of course, we cannot ignore the fact that crude oil is under serious pressure, mainly because geopolitical risk around the Russian-Ukraine seem to be easing, reducing fears of supply disruption along the line. However, hopes of a federal rate cut are keeping some support alive. And you know what that means. When the Fed is expected to cut interest rates, there is a chance that the dollar will reduce in value. And if the dollar reduces in value, you know what that means to the crude oil, which is known to be a US dollar denominated asset. So the crude oil becomes cheap because other currency assets find the dollar cheap enough to convert to, and that increases the demand for crude oil. And you know what our simple economics tells us: when demand increases, price tends to rise. Now, with that said in mind, we can see that the crude oil is stuck within geopolitical risk around the Russian-Ukraine situation, and of course the Fed rate cut expectation, which of course may keep the price of oil supported around the $61.50 level. Now, with Paul Jackson Hole's speech coming up next on Friday, it's going to be a major catalyst, as major key players will be waiting to hear what he has to say. Now, looking at the structure here, let's scale down into our execution time frame to see how the market has been evolving since the beginning of this week. Now, scaling down into the 1 hour time frame, we have a simple trading setup to guide our decisions today. Now, let me zoom in so we can see things more clearly. So the week actually started on a strong bearish note. As you can see, the price started the week around the $62.30 level, and it dropped significantly into the $61.60 level, a little about 10 cents shy of our key level at the $61.50 level, and immediately price came into the $61.60 level. We saw price rise again, as you can see, came back into that resistance line one more time, dropped back again, and as a result of this, I was able to establish a range bound structure. As you will see that the last 10 to 11 hours price action remained confined within the $62.30 level and the $61.60 area to emphasize the prevailing uncertainty in the market for this at the start of this week. And you know how we use our range bound structures here. We do understand the fact that when price is within a range, there is an indecision going on. Negotiation between buyers and sellers is still ongoing. No one knows who's going to win, but we get a clue of who is winning if the range bound structure is broken. So if we see a breach to the downside, it shows that sellers are gradually gaining momentum. And if we see a breach to the upside, it tells us that buyers are gradually gaining momentum. So as a result of this and the fact that price still remains above the key level we identified on the 4 hours time frame, I am maintaining a bullish bias here. Now, I'm also taking into account the Fed rate cut expectation, which of course is the driving sentiment at the moment, and this could likely increase demand for crude oil, as majority might want to capitalize on the weakness of the US dollar to ride this move to the upside. So as you can see at the bottom of my screen, I already have a buy position triggered on the USOIL spot, which is currently running with about 20 pips. But if you are willing to be part of this with me, buying above the resistance line here, which appears to have been broken, and it appears price is going through a retest of structure right now. So buying above the 62 $62.30 level is looking reasonable at this particular point in time. And if we consider the pivot lows since the week began, the first pivot low is right here, and then the next one was a higher low. It further confirms that the momentum appears to be going to the upside. Now, if we connect the pivot lows now, you can see what we have. We have a beautiful ascending trend line, and as long as price remains above this ascending trend line, we have no business buying this particular asset. So even if price drops into the structure, we still feel confident that buyers are still in this particular market. So that is basically what I'm going to be using to navigate this market today. Now, in as much as we are tending towards the bullish side of this market, we cannot ignore the expectations that inflation is still high in the United States. And whatever Powell says during the Jackson Hole speech this week is going to be a key guide to know whether investors will still be holding onto the dollar or dropping it. And if they are holding onto the dollar, the price of dollar could rise, and we could see a situation where the key level at the $61.50 level gets broken to the downside to inside selling ideas. So what this simply means is that I will not consider selling the US oil spot unless the $61.50 level is breached and broken to the downside. Maybe I could sell before that, but at the moment, since I'm looking at the market from a long-term perspective, I want to feel comfortable selling only when the $61.50 level gets broken to the downside. Well, since we have an ascending trend line, we could see selling ideas, or maybe if price finds selling pressure below the structure, maybe until then, we will, when we get there, we'll cross that bridge. But at the moment, I maintain a bullish bias. And where was the stop loss going to be? I actually placed my stop loss below the $61.60 level. We can still have it around the below the ascending trend line, maybe around the $61.78 area, dovetailing to about 50. I remain bullish. We have a buy position running, and I did welcome you to join me at the break of the $62.30 level. So this is my simple view on the US oil spot going into today's trading session. We have a range bound structure. We have an ascending trend line that we are going to be using to navigate this market today. If you have any questions as regards to this analysis, or you need some clarifications as how to manage the trade, feel free to let me know in the comment section. So I'll take about 5-10 seconds off so I can take a sip of water and then come back and let's continue from where we stopped. Stay tuned in. All right. So in the absence of no questions, we are good to go, right? We are all on the same page. Structures duly marked out, and let's wait patiently for the structure to guide us accordingly as we monitor price action. The trend line and the resistance line at the $62.30 level continues to support the bullish bias we have, and we will not consider selling unless the $61.50 level is broken to the downside, and maybe we could consider some short-term selling ideas at the breakdown retest of that ascending trend line. Let's see how the market will play out, and of course, if anything new comes up, I will be updating us on my trading view sorry, on my Telegram platform this time around. Okay, so I wish us all the best of luck on the US crude oil. So moving on to the next asset on our watch list. So the next asset I am looking at today is the GBPUSD. I'm very sure you must be surprised at this. Well, we have been trading the USDJPY for over 3 months straight now, and we've done practically well during this time frame on that particular asset. But one thing I noticed in the last couple of weeks was that the momentum around that market is looking a little bit choppy. As if it goes bullish, the bullishness is not really emphatic, and if it goes bearish, the bearishness is not really emphatic. And this has been ongoing for about 2 to 3 weeks now. And when I was looking at the chart today, during the weekend, I wasn't really convinced of which particular direction price may likely go. We're still looking as if price will just go a little further and come back into that entry zone. So the market has been a little bit choppy in the meantime. And when I went into the GBPUSD market, I noticed a simple structure here that looks interesting, and I think I would love to trade the GBPUSD this week. Now, what did I see on this chart? Now, after taking into account the character of price action since the last week of June, you will see the US dollar appear to be gaining traction, right? And if we connect the series of lower highs, you will see we have a beautiful descending trend line which had supported that move all the way into last week's trading session, where we finally saw the pound sterling break out of that trend line for the first time in about 3, 4, 5 weeks. I'm not sure which time that is. So we saw the first breakout of that descending trend line right there. And now that the trend line has been breached and broken to the upside, we saw that as soon as price got into the 1.360 area, we saw that buyers lost momentum, right? And the second attempt to do so on Friday also lost the momentum, as price was unable to even get close to the previous high, forming a lower high in that regard, and showing us signs that sellers may likely come in at any point in time. Now, that questioned me and said, what has been going around the 1.36 in recent times? So I went to as far back as May and look at how that 1.36 had been holding selling pressure. So you see, every attempt by buyers to break out of that structure since May has always been resisted by sellers, as you will see here. But we saw a breakout happen, of course, in June, and then we saw a little bit of consolidation during the first week of July. But at the end of the day, buyers succumbed to sellers' pressure, and that same area became a selling niche one more time. And we saw what happened during the last week of July, same selling niche, and right now, price is back into the structure, and immediately price got there. What did we see? We saw selling pressure resume again from that area, and that said to me, well, I think it's time we do something about this one and make that 1.3600 level a key level going into this week's trading session. Now, zooming into the structure here, so that's the key level there. And one thing I'm beginning to consider here is that if I am going to be buying, I would rather want to see price take out this supply zone, at least price breakout, retest that structure to confirm that buyers have finally come to stay. But if price continues to oscillate around this area, especially below this temporary ascending trend line, I will feel comfortable selling, right? And you know, from a theoretical standpoint, when price breaks out of a key structure like this descending line, we expect that some point in time price is likely going to come back and retest the trend line in an attempt to continue that uptrend move. And if we look at the distance between where price is right now and that trend line, we are talking about 150 to 170 pips. Now for me, that is quite huge and it's something I would love to take, especially when risk-reward ratio is very good, because the previous high is about 35 pips to about 150. That's about a risk-reward ratio of 1 to 6 thereabout, which looks quite reasonable. Now, since the new week has begun, let's scale down into the 1 hour time frame where we will begin to see things more clearly. So since the new week has the pound has been moving in sideways as market wait for the Trump-Zelensky talks, where hopes of a peace deal could boost risk appetite and lift the GBPUSD. And that is. Now, even without progress, traders don't expect heavy downside. Much of the war impact has already been priced into the market. That is why we'll still maintain a bullish bias on the long term. So that means price may still come back to retest that structure we talked about earlier to continue that uptrend scenario. Now, I want to be part of that bearish move if it happens. Now, when we scale down into the 1 hour time frame, that is our execution time frame, this was what I was able to come up with. The first 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 hours saw price confined within the 1.35655 and the 1.35470 to emphasize the prevailing uncertainty during the first 11 hours. And one thing you will notice about this consolidation is the fact that it is oscillating just right below that temporary ascending trend line we spotted on the 4 hours time frame. And you know how we use our range bound structures, of course. When price remains below, breaks down the structure, we want to consider selling. If price climbs above the structure, we want to consider buying. And if you look at the bottom of my screen, you can see that I already have a sell position triggered on the GBPUSD as price action broke down, retest the structure multiple times in the last 3 to 4 hours, showing signs that sellers are gradually gaining momentum. So I'm still hopeful that this bearish move will suffice and will continue to thrive. And TP will be around that trend line we talked about earlier, somewhere here, maybe around the 1.33700 area. So I will just place that TP right now. I'm here to put my TP on the GBPUSD, right? So that is basically what I am looking at around this particular market going into this week's trading session. And if price continues to drop, let's say price drops again and we have another level here at the 1.35250, which could trigger more selling ideas if price action ever breaks down and retests that structure. That level you see here has been a selling niche at some point last week, as you will see, before it got broken on Wednesday and then supported here on Thursday. So we're going to watch how price plays out around that structure. So if price comes close, we move all stop loss on the sell positions to our entry point while we monitor price action around here to see if buyers will come in or a breakdown retest of structure will happen to make us add more sell position to our existing trade. So that is my view here on the GBPUSD. I currently maintain a bearish bias. But if price at any point in time takes us out of the sell position and goes in the upside direction and then breakout retest that resistance line, we could be considering buying. And if we buy above the 1.35655, as soon as price gets close to the 1.36, move all stop losses, secure the buy position, and wait to see if the 1.36 will get broken. If it gets broken, we want to be adding more buy positions to the existing trade. But if selling pressure persists again around this area, I am going to be selling again. So that is what I'm looking at on the GBPUSD today. You can see it's a simple setup, right? So let's see how this is going to play out. I'm very hopeful about this current structure, and let's see how far that will take us. So that is what I have for you on the GBPUSD. Let's see how the market plays out. And if you have any questions, feel free to let me know in the comment section. So I will wait and see for the next 5-10 seconds if there are any questions before we move on to the final asset on our watch list for this week. I see your comment. Effat Shakhtar says, help me. Of course, how can I help you? Please clarify that. How can I help you? In what way and in what manner? Okay, so I would love to know that. Or you can DM me on my Telegram at Ask Master Sheriff Daramola on my Telegram. You can DM me right there. Or you can send me an email. My emails are right in the description box below. And let's talk. So in the absence of no questions, I guess we are all on the same page, right? And on that note, let's just move right into the final assets on our watch list for this week. Stay tuned in. So my final asset for today is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And of course, the gold has been struggling in the last couple of weeks. For those of you who have been following this with me, it has been struggling seriously as a stronger US dollar and a stable risk environment keeps safe haven demand muted or capped around this corner. However, expectations of Fed rate cuts in September and ongoing geopolitical uncertainty are preventing a deeper sell-off. Now, when we look at the structure here on this chart, and before I go, sorry, I wasn't able to drop my thoughts on the XAUUSD during the weekend. I was very, very busy and I had no time to do that. But glad we're here together to look at it together and see what is really going on in this market. So when I look at the chart here on the 4 hours time frame, taking into account what has been going on since July, you will see that the market has been going through a series of lower lows and lower highs, and it appears we have a mini descending channel to work with. So this is the support line of the channel after connecting the series of lower lows, and the resistant line of the channel after connecting the series of lower highs. And though price did break out the structure at some point, then it turned out to be a false breakout. And look at how that same resistant line had continued to resist every attempt by buyers to break out of that structure. Now, besides this descending channel identified here, my key level for this week is the 3,335. Now, why is that so? Let's zoom in so we can see, taking into account what has been going on in the last 3 weeks. We can see that that level had served as resistance and support line, right? And then we saw the final breakout here happen at the beginning of this month, and ever since price broke out the 3,335 at the beginning of this month, that same level had continued to hold support of that area, giving us clues that buyers may still have the potential to break out of that resistant line. Now, what are the things that could favor that sentimentally? Well, Fed rate cuts expectations. Traders still expect a September rate cut and possibly 2 more cuts this year, giving gold some cushion from heavy downside. Then besides this, the Trump-Zelensky meeting and wider peace talks with European leaders today remain a wild card. Any shift towards peace could further pressure safe haven demand, and then that could increase, that could incite further selling pressure. And then you would notice that the last 1 week the market has been a little bit cautious, right? Market price has been range bound. We can see consolidating price hasn't really had a clear direction, as market are cautious at the moment, waiting for the Fed minutes this midweek. The Fed minute is coming on Wednesday. Is that Wednesday or Tuesday? Yes, Wednesday, 6 p.m. UTC, where the FOMC minute will be released. And of course, Powell's Jackson whole speech for clarity on the pace of rate cuts too is also there. So Friday too is also there. So the market has been a little bit cautious as regards to that. And this is evident on the chart as price continues to oscillate around that resistant line of the descending channel. Now let's scale down into the 1 hour time frame to see how the market has been playing around that key level since the new week began. So on the 1 hour time frame, which is our execution time frame, this is what I was able to come up with. So let me zoom in so we can see this is where our center of focus is right now. So the week started around our key level, right? Just right here, the week started, and then price dropped into the 3,324 and then rose back up again into this area to establish a range bound structure. So we had the resistance line here at the 3,348, and then we have the support line here at the 3,324, giving me a range bound structure. And the fact that price remains around that key level for me tells me that we are at a crucial juncture. And you know how we use our range bound structures, of course. We want to wait patiently for price to either break out the resistance line to give us some buying ideas, or break down the support line to give us selling ideas. Now, don't forget that this is the resistant line of the descending channel, and we need to be very careful about buying the gold commodity at this point, especially if we consider the strong US dollar pressure. Remember, the dollar is very strong at the start of the week, as utter inflation data reduces the chance of a big Fed rate cut, which can weigh on the price of gold. Then besides this, equity markets are steady at the meantime, limiting safe haven demand and capping the gold's upside. So even in as much as we are buying the breakout of the 3,348, we need to be very careful not to feel too confident in the market. So if price rise into this area, we definitely want to be moving our stop losses, secure the buy positions while we wait patiently to see how the market will react to that resistant line of the descending channel, where if price breaks out of the resistant line of the descending channel, it could welcome more buying ideas. But if selling pressure persists and buyers find it difficult to break through, it could incite the next wave of bearish move in this particular market. Hold on a second, please. Sorry about that break. I had to attend to something very urgent. So, like I said, I already bought the gold commodity at the moment. If you look at the bottom of your screen, you can see it's currently running, though not really in good profit at the moment. About is it about 5 pips thereabout? I don't know, but at the moment, breakout retest of this resistant line just aligns with our trading analogy, our trading approach. So I'm buying there, and I'm going to continue to monitor price action around this area. Then like I said earlier, if price moves into this resistant line of that descending channel, close to it, we move our stop losses quickly, secure some profit, or worst case scenario, move it to break even. Then we wait patiently to see how the market reacts to that resistant line. Will it break through? If it breaks out, retest, we'll look out for more buying ideas. But if buyers find it difficult to break through, and this of course will reflect on the chart as continued selling pressure around this area, then we can join a massive sell to the downside. So that is basically the idea around the current structure here. Now, selling the XAUUSD for me will not come until maybe we see price drop below the support line for this week. So this is our support line for the week. That's the lowest point price action has been for this week. That's the 3,324. And if price can break down, retest the structure, then I can start considering selling from that area. But for now, let's wait and see how the market reacts here. I already have a buy position, and if you're willing to join me on this move, you're highly welcome. We are buying above the 3,348. Monitor price action, and if anything new comes up, definitely I will be updating you on my Telegram platform. So that's my simple view on the gold commodity this week. A simple range bound structure already in play. We already have a buy position triggered at the break of the resistant line. We continue to monitor price action from this area. So I wish us the best of luck on the gold commodity. If you have any questions or you need some clarifications as regards this analysis, feel free to let me know in the comment section. Or you have any questions as regards to the I am here and willing to be to answer your questions in those regards. So let's see if there are any questions in the next 5-10 seconds before we start rounding off on today's Forex Morning Mastery. So I'm here to hear from you, Efat. Efat, are you still there? You said help me, and I was asking in what regard do you want me to help? And if it's not something you can write in the chat here publicly, then you can send me a mail. My email is in the description box, or you can chat me up on Telegram at Ask Master Sheriff Daramola. You can talk with me personally on that one. So in the absence of no questions, I guess we are all on the same page, and it's on this note, I guess we have come to the end of today's Forex Morning Mastery. So today we were able to run through 3 financial instruments, which includes the USOIL Spot, and we now have the GBPUSD on our watch list for this week, and then the XAUUSD. I can see some of us are just joining in. Not to worry, you can still watch the replay of this session immediately the session ends to catch up on what we have discussed. The trade is still around our entry zone, so you can still take advantage of them if you can. So we had identified simple trading setups to help us navigate the market today, and I do hope you marked out the structures accordingly. If you have done so, well done, kudos to you. So all we just need to do is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, ensure that you have a well-defined risk management strategy in place. And for those of you who are joining me for the first time, you are welcome on board. I'm very glad to have you around. I hope you've clicked on the subscribe button so you don't miss out on our subsequent editions. I do hope you are able to gain one or two things from what we have discussed here today. Trust me, the more time you spend with us, the better you get to comprehend my analytical approach. So I look forward to seeing you same time on Wednesday, 8:30. Though we started this today very late, but the usual time is 8:30 a.m. UTC. That's about 9:30 a.m. West African time. So I look forward to seeing you then. So it's on this note, I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.